Welcome, everybody, to episode 3 of Tax Therapy with your co-hosts, Sean Monahan and Stephen Palmieri. For those of you guys joining us live, chat in your comments below. We are here for you. Or if you're watching the replays, chat us, comment, tag us, and we will get you guys all answered up. So we're here to talk about all things, everything's tax-related. Tax therapy. We're here to ease your tax pain. Sean, good morning. How are you doing today?
Morning. So all's good. All good here in Texas.
All right. So in the news today, guys, let's just jump right in and do a quick screen share here. And right here. Boom. Okay. So in the news, yesterday, we have United States Commerce Secretary Howard Lutnick said specifically, expressly, that President Donald Trump, his goal is to have no tax for anyone below $150,000 annually. How nice would that be? And so, Trump has said on numerous occasions that he wants to eliminate income tax. I think it's probably going to be like a stair-step program, though, because Sean, let's talk about this. You've done taxes forever, and if he's able to cut fraud, waste, and abuse, he's able to get tariffs. It probably could be possible to stair-step this thing to where the American people are taxed less. Let's talk about that. What are your thoughts on this?
Well, I think there's a lot of education the public needs to understand as to how revenue is generated from a federal revenue standpoint for the government to support itself, or at least we support the government, as the case may be. And then on top of that, what taxes are we talking about? Because there's a lot of misunderstanding. For example, income tax. Income is the main we're talking about. So if you look at the total federal revenues, and I haven't looked at them in a number of years, but probably back around pandemic thereafter, we were collecting somewhere around $3-something trillion in taxes for the federal budget, spending about $4 trillion. Of course, COVID in the last administration took that to something much different. But we've been in a world of spending $4 trillion, collecting $3 trillion for a number of years, or some ratio like that, going back to probably the Clinton years, when I think Clinton did start balancing budgets and such, but still doing something of that nature. And so when we talk about who pays the tax, first and foremost, the main taxes, you have income tax, which is across businesses like corporations and individuals. And then you have payroll taxes, which is the Social Security tax out of our paychecks, and which an employer pays the other half. Those two are the vast majority of forms of revenue into the federal government. Then you have like estate taxes and other things that are smaller, excise taxes that are smaller. And then if you look at the income side, if you're looking at who pays the most on income, it is going to be, I think we talked about this privately, but somewhere in that 5% range of high income earners pay like 20% or something, 30% of the income tax. And then as you creep down to somewhere around 20%, I think it's 20%, and someone can requote, but this is an income statistics of income in the IRS. They publish this, so you can verify it yourself.
Well, that's an interesting point there, right? Because a lot of people have a misconception that there's ways to avoid paying taxes. Like sometime last year.
Let me finish this one point real quick.
Go ahead.
So as you go from the top 5%, then the top 10, then the top 20, you're moving into about 60 to 80% of the income taxes paid by those highest income earners. So that under 150 is not generating a significant level of income tax to the government. So it's a fairly easy, we call budget haircut to take. And Doge could probably fund that. All those Doge cuts could probably fund that. So what they're probably doing is saying, let's cut our spending down, and then we can give something back to the middle America people, the middle class,
right,
through those cuts. And that's where we could do it, because we don't really get a lot from anyways. We get them from up here.
I mean,
so it was very manageable, I think, quite honestly, to do, and very politically, obviously, to do. So I think it is achievable at that stair step as you're talking about.
And when you think about it, the businesses themselves do pay a tremendous amount of taxes, between payroll taxes and just, when they purchase things, sales tax, when they purchase their goods and sales and supply.
Well, yeah, it's usually consumer pays that, and the business just sends it. So that's not the same thing as the business paying it. But to your point, there are a lot of other business taxes, the import taxes, all that stuff they're having to pay. So there's a lot of other taxes that get picked up in the process.
Yeah. And last year, Mark Cuban tweeted, I guess he X'd, that, because the tax thing was big and it was a political year, it was an election year, right? And so Mark Cuban was like, basically said that he paid like $200 million in taxes. Now, I don't know if he had sold one of his businesses or something. And then, of course, Elon Musk claims that he's the human being who's paid the most taxes to the IRS. And so, but to your point there, it's like, okay, I mean, between these two people, I don't even know how much Elon Musk paid, but I'm sure it's a lot, right?
Yeah.
I mean, if Mark Cuban's out there tweeting, he literally tweeted, I saw his post, because he got into an argument with somebody and he's like, there's about everybody paying their fair share or something like that. He's like, dude, my accountants are finishing it up and I'm going to pay $200 million gladly. I think it was about government waste. He was like, I'm going to gladly pay it. And so the point there is, how many average individuals do you need to put together to pay $200 million 1 year in tax, right? That's a lot. So, and, obviously we help folks fix their taxes, fix their finances. And, these folks are hit hard because you don't have a lot of resources. You get behind, and then trying to get these things fixed up. If you can just eliminate the poor individual taxpayer, Joe consumer, from having to file a tax return, period, that is huge. We'll probably lose some clients, but we'll have to gain new clients.
Well, my guess is you'll still have to there'll be some kind of method that the government knows that you're making under the 150. So either you file just to say I don't make 150, or the government knows by some report. Think of the W-2. You still get a W-2 under 150 between you and your spouse. You're clear, no issues. Yeah. But who knows? But there still may be, as we know, you still may need to file just to be sure you kind of make sure the government can't come back and check on you, because we have the 3-year statute for chasing you and all that kind of stuff in terms of
Big Brother's still going to be breathing down your neck.
Probably a little bit, and we got to realize that what one administration sets in place, the next administration can undo.
Yeah,
push to undo.
Yeah,
so you still have to
think long term. They're going to have to adjust the tax code to at least make it sort of solid. I mean,
there's a lot of other things they have to go into and kind of set the So, but I think what you see Trump doing and the administration doing, and I kind of tip my hand as to where I think politically, but we have always lived under a lot of assumptions, like it's okay to spend more than you make. For some reason, this government for 50 years, really since post 60s or 50s, spend more than you make, and coming off the gold standard, all that kind of stuff.
Petrodollar.
Yeah. It turned into it's okay to spend more than you make, and we get away with it because there's really no other world currency to compete with us, and so people buy our extra dollars, but at some point in time that has to come to be dealt with.
Well, I think a lot of people don't appreciate what you just said there. I mean, the reason we're able to kind of live the opulent lifestyle that we do is because we are the reserve currency. And, a bunch of countries were getting together with that BRICS. They were, of course, notice it wasn't one country individually because they weren't strong enough, but a bunch of countries were trying to pull together to create another currency. And then, of course, when Trump came in, and he said last year, that's worse than losing a war if we lose the world currency.
Yeah, absolutely. Yeah, you're out of the whole thing. I mean, our dollar would drop by a third easy, real quick.
So, I mean, he's had to come in and rescue that, and basically told all these countries, if you continue moving forward trying to compete with our dominance of the dollar, you'll be tariffed out of oblivion and no more business with the United States. It does go to show the power and the value of doing business with the United States, but not to get off topic, but I mean, we've had the petrodollar for 51 years now, which means, the dollar was only backed by the Saudi Arabian gold, oil, It wasn't even backed by gold. And so we've had this fiat currency. The government has lived beyond their means. But if our poor, individuals live beyond their means and can't pay their taxes,
exactly. I mean, so
IRS comes and beats your ass up, and all that kind of stuff.
Yeah.
So I mean, I do feel as though if we are able to get into a system where just your average person doesn't have to deal with an annual tax return, I mean, I just feel that that's huge in general because there is nothing simple or even fair about the tax code. I mean, people have to come to us and, I mean, it's like, the tax code is 100+ years old, and it's got all the carve outs and the pork and the loopholes. And I mean, there's literally nothing that makes sense about it. It's,
Well,
tax planning is all about working
yeah.
Congress's nightmare of the last 100 years of what they've created. Go ahead.
What you end up really going back, if you follow any kind of bill, this isn't just tax, but we'll talk about the tax. Someone's wishing you happy birthdays.
Yeah, thank you, Mitchell. You are the man. Today is happening to be my birthday. If you want to just go ahead and DM me, some sort of a gift card or something, Mitchell. Go ahead, buddy. Yeah, there you go. So, thank you, buddy. Go ahead, Sean.
So, but I forgot where my thought went now. I lost my train of thought. But we do pay other taxes besides at the under 150. If you're a homeowner, you're probably paying some kind of property tax. And here in Texas, that's a big deal to pay property tax every year. Sales tax. Look at all your little bills, your utility bills. Look at all the little taxes on your utility bill, your internet bill. It's not just sales tax. There's all kinds of transmission tax, or I don't know, whatever other tax they've slapped on there.
Right.
And so you can find yourself paying a lot of other taxes along the way that eat at your earned dollar. And so they're probably still looking at the national sales tax as another form of income support. And that may have its burden of sorts on us under the 150. I don't know how that'll pan out. But that still could come back and still be another, 10% on whatever you buy, whatever 8%, what do they think they're going to charge? I don't know. But that will still be a piece of it. But that gives you some discretion. I just don't buy something. I don't buy that. I think you start pushing a consumeristic way of thinking that I stretch my purchases a little bit more. I stretch what I buy for a longer term than to buy something every couple of years that I don't need.
And it's interesting. We were talking about the national debt. I saw some government numbers the other day, and our national debt in almost 30 years has increased almost 30 trillion. I mean, like literally it was 30 trillion. I think.
Yeah, you go back, Clinton actually did a fair amount to bring it down during his term, which is kind of weird how that was the trend back then. But now the same party wants to push it up more like a Carter style of finance.
Yeah.
But or fiscal policy. But yeah, and so it's you go back and you can track it. It's I think it's even in the IRS statistics of income, or you can go to other sources and get it. But yeah, it was like 7 trillion, I think, under Clinton is where it netted out.
Before 1913, we didn't even have an income tax. That was the year the IRS was created, the Federal Reserve was created, the 16th Amendment was passed in order to enable income tax, because they would not have been able to apportion it very, very easily. I mean, it was a whole thing of multiple years to get 1913's Constitution Amendment.
And go back to that, it was supposed to tax a very small portion of the population, the rich.
Right.
And a lot of pieces of the tax code, that's the original purpose. And then it just gets exploited as
once you have it, then you open.
So when you hand the power over, it gets exploited. There's another part of the code called AMT tax.
Go ahead, man. Yeah.
Yeah, the AMT tax, which was in the 60s. Again, it was to go in and, okay, here's your normal tax calculation. Yeah, but you make this much money. We're going to take this stuff away. We're going to tax you under this calculation. And also alternative minimum tax. That was supposed to tax 1% of the population. Now it's anyone who's probably in a certain level gets it. It's much more commonly taxed to the average person now.
Yeah, I mean, we're at the point now where Congress just uses the tax code to get reelected. Essentially, it's like, oh, let me campaign on this. And in all fairness, I mean, Trump literally did that because he was like, I'm going to campaign on no tax on tips, right? And I mean, you sit here and you think, okay, well, that sounds great, but what about the person at McDonald's making whatever $10 an hour? It's not tips. I mean, so the point is it's not really very fair. But so both sides campaign on using the tax code as a tool to get elected, and that we have to deal with that when we help prepare tax returns and clients have questions and.
And that creates
paying taxes on their Social Security because they have other income, and they're like, "You mean to tell me I pay taxes on my Social Security?" I'm like, I do mean to tell you that. Sorry, write your comment. It's like I'm going to sit here and tell you it's bullshit. I'm a tax professional, right? But I think it's just important to understand that a whole thing had to happen to get 1913 to happen, you needed a constitutional amendment, then you needed to create the IRS, you needed to create the Federal Reserve, and that did not happen without powerful bankers lobbying and multiple years of that to get to the system we're currently in. So for folks who look at the current system and they're like, oh, I mean, how could it be any other way?
Well, that's the whole point. So yeah, Trump talks things and he says things, whether it's, changing to a Gulf of America or whatever. His thing is to bust the assumptions we live under today. I think that's really the larger goal. So when he says, I'm going to abolish the IRS, his whole point is, okay, now justifying why the IRS should exist.
Right.
And if you start busting up all these assumptions and you start realizing it's this big, maybe it needs to be this big. Maybe it's not down to zero, but if he said, I'm taking it to zero, if he said, I'm just going to take it down this, he's going to get a big fight. He says, I'm taking it down to this, he can get it down to this. And so it's just that's the art of the deal style he has. And so it forces people to reevaluate the true and the facts of how things are done. And that even goes back to how any kind of bill is proposed, whether it's a spending bill for tax or anything else, is Congress doesn't really genuinely sit down and factually debate any bill. It's just backdoor wheeling and dealing. I'll sign this if you sign that, throw it out there. I can look good to my constituents. You look good to yours. We'll do this. We'll pack it together, give it a nice, pretty name. And then we throw it to the agencies to manage. And the law is written quite vague a lot of times, as you know.
Right. Yeah.
Very vague. What is substantially, materially appreciated mean? What does that mean?
A good point in and of itself is the administrative state. And with our world, the IRS, we can talk about that. And that's, again, kind of part of what Trump is working on, is reducing the administrative state. And for people who don't necessarily understand, that's all executive branch stuff that's created as an overlay on top of the actual language of the law.
That's what they do, is Congress then illegally delegates to the administrative state to clarify the vagaries, which basically says, as a Congress, I'm not going to do my job to write law at a clear enough level that it can be applied properly without any further clarification.
Right.
Other than some rare exception or something, unintentional consequence, but it's intentionally sped through to get a justification that I'm here as a congressperson, I'm doing my job, versus I personally think it's a part-time job.
Right.
I don't think it's a full-time job.
I mean, I think, if it were what I would say a fair system, I mean, the presidents so far up until Trump have basically let their bureaucracies below them create the regulation. So Congress creates the law and says, in this law, we let the Internal Revenue Service interpret it. Now, the executive is vested in the president. The president can then have his team. So up until now, the president has just let his team create regulations. But now what Trump is saying is, well, I'm going to review all the regulations because I am the executive. My attorney general and I are under his executive order are the only two who can now interpret laws on behalf of the executive now, and I think that reduces a lot of the ambiguity, because now you know who you can hold. And if I don't like the way Trump is interpreting it, now I know who to blame and who to vote against, right? Whereas if it's some unelected bureaucrats that are creating regulations, how are you ever really going to change it?
Well, I would go even further than that, is that the law is written by Congress. If it's an interpretation by the sitting president and or his direction, that interpretive power shifts from president to president.
Right.
And we really shouldn't be living on tax code or any other regulatory code that can swing back and forth. Otherwise, business, our lives, we can't function. An election becomes a bigger transition process than merely, changing of the guard, so to speak.
That brings me to kind of the final cherry on top of that, which is if you have very little regulations, and then, like, I am all for the regulators regulating, but litigate the law and make case law in the judicial branch rather than create your regulation, which holds the weight of law in a lawsuit. And that's where I think the scales are tilted, because the regulatory agencies create their regulations, and then when they go to enforce the law, they put their regulations in to support the law. And up until Chevron was overturned last year, for 40 years, the judges had to give deference towards the regulators and their regulations. And so it's like The regulators create their own interpretations, which hold the force of law in the court of law, right? And that's where I think it has been extremely unfair. I'm all for clean water, clean air. We have laws that require clean water, clean air. And if a regulator thinks you're breaking the law, let them sue you based on the law and not beat you up with their regulations that nobody voted for.
Or just rewrite a reg. I mean, it would be basically, it literally would be rewrite a reg to fit that set of facts and circumstances, and say, this is now our position. We just issued a reg to address this. And so versus, the law isn't clear, you're going to have to litigate. And now you give way too much power to the executive branch, the administrative agencies, to just rewrite the reg and say, well, we're going to write a reg and go through the process and put it out there for commentary and put it out there for feedback. And then by so much time it's written, it's done, and that kind of stuff. And so that becomes a very powerful process that shouldn't be there. It basically gives law writing a power to the executive branch.
Right.
And that's not what the Constitution is supposed to be. So.
And with what we deal with the IRS, you've got so many levels of executive authoritative documents. You have publications, you have Treasury regulations, because actually the IRS is really part of the Treasury. A lot of people may not realize that. So you have Treasury regulations, and you have IRS rules. You have the Internal Revenue Manual, which is like their own.
Well, that's their follow through and that they prioritize on, but those are sources to kind of see how they're going to review something and look at something. But the source is obviously Internal Revenue Code as written by the Congress, and then you have regs, which is the Treasury regulations they write and propose. You can have other sources you bring to the table. There's counsel advice that they have. You actually have the ability, if you really feel something and you want to get your own personal, you can do a private letter ruling, things like that. But those are expensive, tens of thousands of dollars to pony up and get the IRS to say, bless your transaction. That kind
Which is interesting, though, that you're able to do that, or that you need to do that, which shows the complexity and the ambiguity and everything.
It becomes the rich people can get the ticket kind of a conversation.
Right.
What it becomes. So
So. And interestingly, your government forms, all government forms have instructions, and your 1040, you can just type in Google Form 1040 instructions, and it's literally like 100 pages, the instructions for the 1040. And if that doesn't show you that our tax code, there's something wrong with it, I mean, that's the evidence. The proof is in the pudding right there. Like, why do you need a 100-page instruction manual for a 1040 for your average person who is paycheck to paycheck, just trying to
do something? I mean, maybe say this in a prior podcast, but do this. Go look at a 1040 on 2017 and look at a 1040 today, 2024. And look at the number of pages and all the little columns you now have that you have to detail. They have put so many more things on there.
Let's just take a quick look. IRS form. Yeah, no, you're absolutely right. 1040, 2017 tax year. That's a beautiful thing here. We can just do this in real time. Let's look at this. Yeah, this is.
So that's 2 pages for a 1040, which would include schedules 1, 2, and 3 today with the 1040. Now, if you did that with a 2024 version, it won't. I don't think it's going to show the schedules 1, 2, and 3 included.
And this was part of their attempt to simplify it. They made it more complicated.
So you're going to look at a lot more detailed lines.
Yeah, now you have schedules.
1, 2, and 3.
Yeah, 1, 2, and 3. So you have other schedule on top of that. And so
you have 3 more pages basically on top of that 2-page 1040, which is now that's 5 pages potentially you're having to deal with.
Look, it was 113 pages is what it said on the Google. So let's take a look and see. Look at that, 113 pages. So this is your instructions for your 1040, guys, for our listening audience, for our clients.
So as I always say, it's what they have is now it's not always what you report, but how you justify what you don't put on that return.
Look, free ways to file your taxes. Isn't the government nice? Look at that.
Yeah, that's
filing requirements. Tips. They give you tips, Sean. And for our listening audience, and look,
advice from the IRS is not
look at little
I'm
steps.
accountable
Go ahead,
for it.
just figure this out, and then your and then your step, and then yes or no, and then do all that. And so, you guys get that, right? That's like it's craziness. So,
Yeah.
if they can, and what surprised me is people look at what's happening currently with trying to lean up, and they actually object to it. And I'm like, how can you possibly object to reducing the red tape? And if it can actually be done where you pay less in taxes, how is that problematic?
Yeah.
But from our position as business professionals helping folks like our listening audience here with tax problems, I mean, anything that can be done to make it less confusing.
Simpler.
We're always going to have jobs. I mean, always going to have state taxes, state level.
At
And
least for a while. And but this, even the sales tax. I mean, people don't realize the sales tax reporting on businesses, if they move to a national sales tax, our clients will be more business related because they'll have a business. They'll either have to one justify that this was sales taxable or not sales taxable. And sales tax in Texas and any state is very complicated. It's not straightforward, much more complicated, very situational. And I'm assuming it'll be just as complicated a federal sales tax as well. But what that becomes is the business owners are collecting the tax from you, the consumer, when you buy something from them, and they're personally liable for that tax if it's not properly paid. So there's going to be a lot of liability on business owners to properly report their sales tax. And you could sit and see that becomes very, very complex in the sense of personally, and I mean personally, you as a business owner personally, not just the business itself, but you could find yourself personal assets tied to it if it's underpaid and not remitted. You can find yourself
which is the
personally.
current policy of the
It
IRS.
is the current policy at state
Yeah.
level. It's much like payroll tax. If you don't pay the
Yeah.
IRS the payroll tax you withheld from the employee, you personally can even go to jail for that for not doing it. Typically, they want to take your money, but it's a very serious responsibility. And so that's the part that when you become a business owner, it's a lot more taxing, pun intended, a little bit, but it is a very realistic world you stepped into that takes a lot of education getting someone to understand that process.
Well, yeah, and we kind of opened the show talking about that the Commerce Secretary said that Trump wants to charge the no income tax below 150,000, but they have been talking about eliminating the income tax altogether. And so what we were just talking about, for those who haven't been following, is that what the income tax altogether has been proposed to be replaced with would be like a consumption tax, essentially. Like when you go and purchase something, you buy your hamburger, you have your sales tax which goes to the states and the local municipalities, but then there would be a federal consumption tax collected at checkout. And they're actually proposing that that's administered by the states on behalf of the federal government.
Well, that basically just takes the power from the federal government away.
Right.
And they're going to the states to get their money. It gives states the power to, we're getting money, have a better relationship between federal and state balance in terms of how things are done. So I think it's meant to keep the IRS smaller by not having this big entity to bring in, the collection from individual businesses directly, kind of stuff.
Now, Sean, you are licensed in tax court. Some of our audience may not know that. You've been in actually helped taxpayers in tax court,
yes.
And it's a very gray world when you get up to that point, is it not?
Well, it's a lot of negotiation.
Yeah.
A lot of give and take. And tax court deals with the IRS attorneys. For the most part, they're very reasonable. I mean, they're not super aggressive. If you were to do other districts, other court venues like U.S. District Court or others, you're dealing with Department of Justice attorneys who typically do want to litigate, do want to be aggressive. It's a very different thing. I've not done that, but it's a very different process. Judges are going to be in the U.S. tax court are much more knowledgeable of the code. So it's not a feeling-based argument. It's not an emotional-based argument. It is literally records, very logical, code, that kind of stuff, law. But it is reasonable, and they will, they'll simplify things under negotiations, and the council will do that. But it's kind of your last place for a reasonable discussion about your situation.
Well, I think that's kind of an important takeaway. Maybe as we kind of land this episode, is that because by the time you're all jacked up and messed up as a taxpayer, like you can't squeeze blood out of a turnip, as they say. And so by the time you try to go through the appeals, the resolution process, if it ends up going to tax court, it is kind of your last stage, unless you need to go to district court, but you're still in the court system, right? So your judges, your tax court judges, you share with me a lot of stories where they're just like, hey guys, IRS taxpayer, you guys get out of my court, try to figure this out, and come back and see me in 6
Well,
months.
the process, I think I've detailed a little bit, but there's a calendar call. Really, you have a calendar date 5 or 6 months prior to that, and you're trying to negotiate everything prior to that. You may even have on that calendar call Monday, you show up, and it may be to file your agreed decision, your agreement, and that's it. And that's probably, let's say there's 300 cases on that day or that week. It may whittle down to 5 or 3 or 2 or none. So these judges travel to these cities, and so that's kind of how that process works. And out of 300 cases, the judge is going to want to understand, why do we need to be here? So he wants to be sure that the court's time is used properly. And I've seen him on both sides go, that seems to be an opportunity to be a reasonable deal here. Maybe you two need to go negotiate, and so forth. And so the parties need to go negotiate better and so forth. So there is an intent to basically plea bargain, if you want to call it, and not be I'm gonna follow my sword kind of thing.
Yeah.
So yeah.
Well, I think and a takeaway for our audience on that, if you're watching this and you have tax problems, obviously, DM us, shoot us a message on whichever platform you are watching this on. We want to talk to you. We're here for you. And I mean, really, there's no situation too hopeless is really a takeaway, because look, I mean, things happen and there's a process in place to try to go through resolution. There's currently not collectible. If you're just in a position where you basically are kind of insolvent, you really can't even make payments. We can try to get the IRS to push the button where they're like, okay, this taxpayer is not really in any sort of a resolution status, but we're going to push the button to stop collecting for a year. You know what I mean? I mean, that is a button that they have in their system to say, okay, Joe taxpayer reached out and we can't squeeze blood out of a turnip, and that's reality. And so we're going to put him in not collectible. And if you can't get there, then, hey, can we get you in some sort of an installment agreement or something like that? And there's a lot of options to try to go through, and tax court is an option, but the point is like there's a whole lot of layers to get you to a resolution, if you've got problems.
And we kind of jumped into the resolution world in this podcast and kind of meandered down that path. But the best thing, and I will tell you this, when it comes to tax problems, I know that the IRS is abusive, or it has its abusive process. This bureaucracy a lot of times, and compartmentalized authority, as you kind of dealt with when you tried to call the IRS. So I'm not dinging on the individual employee per se.
Right. Yeah.
But they have limited authority, limited discretion, that kind of stuff. That's just the world they live in. But the worst thing you want to do if you have a tax problem is do nothing. The best thing you can do is to come in to whoever and get ahead of it. Have your own plan, maybe a plan of A, B, and C, and then have that counsel that says, what do I do? Sometimes voluntarily paying money just keeps the bill reducing. And as you get below certain levels, it gets less and less of a priority inside the IRS. So there's a lot of things you can do and take ownership of it. And you don't have to necessarily deal with the IRS directly. As we've seen, sometimes filing a return can fix problems depending on what the issue is. Just a lot of things can be done. And I don't mean it to be mean, but if you can do something on your own and don't involve the IRS in the process, and you're doing legitimately, you are taking control of it. But when you have to negotiate with the IRS, it gets adversarial. They're going to advocate for themselves. And so that's not always usually not the best place to be. You're kind of at you're at option D probably if you're going there, and you've put yourself there. So.
And I mean, we're here for you guys. I mean, you could call the IRS yourself. We recommend that you do it if you want to. But here's my point in that. Just like anything else, you've got folks over there that are kind of new. They don't really know what they're doing. And then you have very well seasoned folks that actually can get stuff handled. And I mean, it never ceases to amaze me every time when I call the IRS on clients, Sean. It's like, oh yeah, the prior person you talked to, they weren't supposed to do that. They pushed the wrong button, like literally. Like, oh, we weren't supposed to do this to the file and treat it this way. We should have just asked for missing information or something like that. And I mean, which if we needed to, push comes to shove, that works out in the client's favor, because you were given, oral advice from a rep to do the wrong thing, and now you've got conflicting, right? I mean, because they're not supposed
Yeah,
to,
but they're not accountable for that. So you
but
just
they're
got to
not accountable,
understand that. They're
right?
not accountable. If it's in verbal, they're not accountable. It has to be in writing to be considered accountable for them. So
Right. And so, I mean, so the point is if you're out there trying to figure this out on your own, I mean, we're professionals, and we still have to deal with the phone bank. And that's another whole thing is why hopefully Doge can make this IRS or whatever come into the 21st century, because I mean they're working off of a 50-year-old computer system, and we don't really have any better pathways to the IRS than you guys do. People think, oh, you guys are tax professionals. You got some access to their computer system. No,
well,
we need to call up and we need to talk to somebody with the authorization
let's
file.
go to that real quickly. And we may have made this comment in the past, but the IRS is pushing out individual and business tools for you to have your own IRS account. And I suggest you go set one up if you're or even a business owner. But if you filed a tax return in recent years, you should be able to set that up in 15 minutes. There's a lot of facial recognition and uploading a driver's license and this kind of stuff to do. But if you do it, you now have access to, I think, 10 years of transcripts. You can go back.
Yeah. And your balance due, like
You balance dues and things like that. So you can look out there, and that is exactly what we have access to through professional systems, but they're giving that stuff to the individual directly. And I really prefer you to go get it for yourself and bring it to me, because it is a really good way to get intelligence on your situation. Because a client goes, oh, I think I owe 100 grand. And you look at it and go, maybe it's more, maybe it's less. I can see how old the debt is and how much priority it's going to be. And if you pick up and call on the phone, you're trying to get a $500 payment, but they want you to paying this $100,000 debt in 3 years, and they're not going to accept it because they want it paid off in 3 years, and that math won't work. So you end up going, okay, let's talk this through and see what you can and can't really do. Or can we, it's based on an unfiled return. Let's file an original return and get that erased. It may even erase the debt by filing an original return versus an IRS return. So
Sean, you mean to tell me that the IRS creates math that doesn't work? No, they would never do such a thing.
Well, they file a return based on what they got on you, and they're going to make the estimate they make, and that's the process. We talk it and we say what it is, but they're not going to deduct your kids. They're not going to declare you married. They're not going to take itemized deductions or business expenses on certain income, that kind of stuff.
Well, and that's just kind of another final point as we kind of take this one in for the landing. But the IRS, so people may say, oh, I haven't filed tax returns, and pick your number of years, 5 years. Okay, that's great. Or 10 years, which happens. You're called a non-filer. That's actually what you're referred to by the IRS. There's a bucket for people like you. But the IRS can actually go in and do what's called a substitute for return. They can take what they've gotten on file for you. Maybe a W-2 was submitted to them, or 1099 was submitted to them, or whatever, right? When you get those little tax forms, a copy goes to the IRS, right? And then they'll file a return. But here's a factoid for everybody: your statute of limitations doesn't start until you file your tax return. And so,
that substitute will be a statute to some extent for the debt they create through that substitute. What you can do is file an original one to either erase that, reduce it, and depending on the situation, it doesn't change the clock. It still goes back to that original assessment. So you still have that 10-year period to have them collect on you. But the original,
if they haven't filed a substitute for return, which happens a lot of times, where you may have gone 10 years and they haven't filed their own return, which you think, how can the IRS file a return for me? Well,
yes, they have all that Big Brother reporting. Yeah,
they're Big Brother. That's what they do. Yeah. But if you haven't filed the return and the IRS hasn't filed what they call a substitute for return, this statute of limitation isn't based on the tax year. So if you're like, oh, I haven't filed in 20 years, the statute is 10 years, I'm good. Well, no, you're not really good, because the statute for those 20 years you haven't filed hasn't
started yet.
Yeah, exactly. So. Now, IRS guidelines typically, unless they sniff out fraud, say, if you go back 6 years, that'll get you in compliance. I mean,
well, that's for file returns. So their non-filer approach is, if you've got that many returns, let's say 10 years, they kind of look 6, and that's really just a policy. They can go back all 10. So that the council, you'll see a lot of times, is just file the last 6 years and you're okay. I would rather say, let's look at the last, however you've been a non-filer, and let's look at that and see what that is, because they can still go back at those unfiled years if they want to. And so that still is an issue. So that's a very serious discussion to have. It's not just don't file all 10 years. I would say let's look and see what we can file, what we can estimate, do the best we can. There are ways to construct a return that are IRS techniques in the Internal Revenue Manual that you talk about. So, for example, if you lived in the same house for those 10 years and you don't have your W-2s or 1099s and we can't find them, or the IRS didn't have it, we can go, well, you paid property tax, you paid your mortgage payment, you paid your utility bills. We can back into some amount of income that was used to pay that. And we can then estimate grocery and things like that. And say, okay, based on all that, you had to have 50, 60K a year or 100K a year you had to pay. And we can estimate into that and go, okay, based on that, that's what we're going to estimate. And that's a way to do it. And that's exactly what the IRS would do if they didn't have anything on you. They would create that through that very same technique of reconstruction. So there's ways to do it. We just discussed, is it worth the time, the effort? Do you have anything there? We talked about all that kind of conversation, see what's relevant. So, yeah.
So that being said, guys, there's always hope. We're here for you. It's a big, giant beast of a system, but we know how to deal with it. We're here to deal with it. So DM us, message us, let us know if we can help you. And that being said, thank you guys all for joining us for this episode of Tax Therapy. We will see all of you same time, same place on the next episode. You all be good.
All right.